Based on what you heard today, would you say Albertans should be more optimistic or less optimistic based on where you thought we would be going into the next budget?
Is it to me or is it
yes, yes.
I'd like to hear their answer to that. You know what? I think, as I said at the second quarter, we feel that we have turned a corner. We're turning that corner right now in terms of where we're going. There is plenty of reason to feel good about where Alberta's headed, but there is, as I said, there are risks inherent in having one customer and one method to get your product to that customer. If we didn't believe that there was a critical aspect to having market access before, it certainly shows up in the numbers today. As our production numbers continue to grow, we need to have better outlets to those other markets. We need to make sure that we can try to get as close to that Brent price as possible. If you can do that, the future, I think, is quite positive. Manufacturing numbers are up, population's up, unemployment, job creation is up. There's lots of very good positives there, but again, you know, we're an oil and gas jurisdiction that has only one customer and only one way to get there, so we need to fix that.
The dollar issue, you suggested that the projections you had might be a bit high. If they are put lower, is that good news, bad news? How does that impact Alberta?
It might be interesting to get some commentary, first of all, about why that would be the case, because I don't want people to think that we're doing it because the actual fact is a lower dollar is better for us in terms of a revenue picture. So if any of my colleagues, Craig, do you want to talk maybe a little bit about the...
Sure, I'll give you our view on the currency. I think when we look at the currency over the last few years, there's been a few components that have driven it to its strong levels. Part of it's commodity price, so firm commodity price environment. It's what we export. It's a good news story for Canada, good news for the currency. We've also seen some portfolio flows favoring the Canadian dollar at a time when other countries were more challenged than Canada, and some of our positives were getting recognized. We saw some portfolio diversification flows favoring the Canadian dollar. And then finally, I think U.S. dollar weakness. If we look at the Canadian dollar relative to U.S. dollar, the U.S. dollar has been weak relative to many currencies, not just us. So as we go forward, we still have a firm commodity price environment, which will support the currency. But we think that portfolio flows, other countries look less worrisome now, and maybe the diversification plays has run its course. And then importantly, the U.S. dollar, less worried about the so-called twin deficits in the U.S. Quantitative easing is coming to an end at some point. Growth prospects there look a little more encouraging, and that suggests to us that we should see a stronger U.S. dollar. And the flip side, that would be a softer Canadian dollar. So we'd be looking for currency settling in around the low 90s as we move through the forecast horizon.
It's already at 94 right now compared to the U.S. dollar. How much lower do you think it can go?
Well, our point estimate for the end of next year is 92. I think a short while ago, I think that was a bearish forecast, but given where we've seen movement going, it's been on the right side of it. But I think, at long run, we used to think kind of 85-cent Canadian dollar made sense, 85-cent range. Now I think when we're looking at a higher cruising speed for a number of the key commodities, you're probably looking at an equilibrium level closer to, 90 cents. So lower relative to where we were, but not too long ago we would have thought that was still a very high level for the Canadian dollar.
Sure. So I would concur with a weaker Canadian dollar. In particular, given we're expecting that the Federal Reserve is going to begin to taper its asset purchases in early 2014, that's going to link strength to the greenback, and as a result, the Canadian dollar is going to soften. And we sort of agree that a 92 cents is pretty much a fair valuation for the Canadian dollar. But we've also gotten messaging from the Bank of Canada governor yesterday in regards to his view on interest rates. And net for Canada, a lower Canadian dollar will be able to support the export part of our Canadian economy. So I do think that that's something that the messaging is coming from the Bank of Canada in terms of where interest rates are expected to go. And that's also having a currency impact here in Canada.
David, else want to comment on the dollar before?
Avery? The one thing, note of caution here, of course, is that currencies move for multiple reasons, and once one looks out beyond 6 months or a year, not the private sector economists don't have a magic crystal ball either. So it does look like the Bank of Canada has softened its tone. It's a bit more worried about inflation being low rather than where we were a year ago, where they were threatening to raise rates. They're pushing off the date at which they would raise rates. That tends to weaken the currency. So at least for the coming year, it looks like we have a weaker Canadian dollar outlook than we might have thought 6 months ago. By the time you get to 2015, the good news is they have time to write another budget. And we'll be visiting that question again.
For anybody, any of the economists, how do you perceive Alberta's outlook, economic outlook, relative to the rest of the country?
I think it's quite clear that Alberta has led the country in growth for quite an extended period of time, and there's nothing in the recent numbers that suggests that that's not going to continue. So you've got a faster rate of growth of population, a younger population, so certainly a more dynamic labor market. You have a Canadian economy that is going to be resting on exports to lever up growth as the global economy improves. And energy is certainly one of Canada's best export opportunities. So on all fronts, and I think it would be hard to find an economist in Canada who doesn't have Alberta running above the national average over the medium term.
And I would agree with that. I would say that we sort of put Alberta typically amongst the leaderboard in terms of economic growth performances, and we sort of focus more on the near term. But as the minister alluded to, the medium term continues to have challenges, and most of those are downside in terms of access to capital, making sure that the oil that is being produced has routes to go in order to make sure that there's not that supply glut in Alberta, and also to continue to draw population, to support some of the things like consumer spending, personal income gains and whatnot, that is a real positive for Alberta, because when you compare Alberta to some other parts, they don't necessarily have the same concerns about housing market overvaluation. They don't have the same concerns about household indebtedness. This is a positive, and that's supporting the near-term performance. But I do underscore that the medium-term challenges are there, and I think that's what we really talked about at our meeting.
Anything else? Doug, you want to make Mary, Doug?
Well, I guess in a way it's very refreshing to come in, because most of us do this sort of thing with a number of finance ministers, and it's actually nice to be talking to a province where 2% growth is not a good year. It's almost like 3% is the minimum. But I would tend to concur with your earlier comments. Even if oil prices don't make great strides from here, we would still have Alberta at the high end of the leaderboard for Canada for the next 5 years. Maybe not each and every year, but on a trend basis, it's very difficult not to see Alberta leading the way for quite a period of time. And I guess just one final point I would make is the fiscal backdrop here as well. A number of provinces actually still have to deal with quite a bit of restraint in the years ahead, and that's an added bonus that Alberta isn't necessarily looking at tough restraint like some other provinces still have to go through. So that's yet another thing that doesn't stand in the way of growth in the years ahead.
Yeah.
It's Alberta right now, I think, is in a very fortuitous position that they have strong growth, and yet inflation is not surging. And so that's a nice spot to be in for the population in terms of good job opportunities, but not having their dollar stretched.
So for Minister, given that this group here is fairly optimistic about where Alberta is headed economically, what kind of pressure is now on you to get the budget balanced quickly?
Well, I mean, obviously we've got a lot of challenges given the flood, and we didn't really talk a lot about the fiscal challenges in the sense of what I have to deal with these folks, because we're talking about what are we going to use as the assumptions that we're going to build into the budget. We're still tabulating the numbers on the flood, as you know. We're still making sure that our due diligence on the applications that we're presenting to the federal government are correct so that we can ensure they're receivable for Albertans. But even with that, we know that we have probably $1 billion hit to our operating line this year. We're going to book that this year. We have another $2 billion worth of capital and mitigation that we're going to have to deal with. So when you talk about all of the positives that we have, you have to kind of balance that out with not only what Sonia and we were chatting about in terms of market access, being able to get our product to market, but also then having to look at what resources are going to be required for the rebuild of Alberta and southern Alberta. And then the other side of this is when you talk about the challenges that we faced in this budget year, a lot of it was around the volume of growth of interprovincial migration, of international migration, And the challenge that creates for us when your population increases by 130,000 people, and a lot of that is migration, it means more schools, more roads, more hospitals, and that becomes a bit of a challenge on the capital side and the operating. More of those. The tax dollars are always a boomerang, right? Because we're going to generate that significant increase in taxes, not the day that they move into Alberta, but at some point into the future.
That is a hot button issue here. I don't know if any of you want to speak here, but Alberta has the lowest tax rates by far in the country. Does anybody think that we should be moving on that issue?
You're talking to a group of economists.
I think the one thing to remember is Alberta's also got the strongest balance sheet of any province. So provinces that are heavily in debt are under pressure in the sense that the bond market, the rating agencies are watching their every move and looking for progress, significant progress year to year on deficits, debt reduction. When you're in a province like Alberta, the pressure in terms of raising capital, for example, in the bond market is just not there. So other priorities, policy priorities, can sometimes take a priority over deficit reduction or a precise target for when you're in exact balance without getting the same sort of pressure that you would have in another province that is really desperate to maintain its credit rating.
The low tax rate is the Alberta advantage. Why mess with success on that front?
I agree with Doug.
I kind of figured that was your answer.
Okay. Any questions from the phone?
Doesn't look like a minister.
All right. Well, thank you very much. And thank you again, ladies and gentlemen, for coming and spending some time with us.